Morning, everyone. For those who don't know me, my name is Helena Nat. I am the Executive Director with the Greater New York Chamber of Commerce. And as you know, we put these webinars on to help you. I'm going to say it again. Our mantra for the Greater New York Chamber of Commerce is to help you grow your business. Today's webinar is how to take your business global. And as you know, we are local, regional, national, and international. We're very active when we're celebrating World Trade Month in May. A lot of you as the attendees and also our presenters are very active on the World Trade Committee for New York City. So we are here to provide this phenomenal and very informative webinar this morning on how to take your business globally. And I'm really excited about that. I appreciate, just want to say thank you to Kenneth, Abigail, Peter, and Richard, and also Becca and Shannon for helping me and on behalf of the Greater New York Chamber of Commerce putting this webinar on. We're going to put your questions in the chat. We're going to do a Q&A at the end. This is being recorded. It will be on Chamber TV. And I am going to right now turn it over to Peter, and Peter is the Harlem U.S. Export as represented. I'm sorry, from the Harlem U.S. Export Assistance Center, International Trade, U.S. Department of Commerce, and just amazing work that you do. You know, New York is the hub, and that's all I hear. And you know what is really great about this? A lot of people think, and I've heard this from our database of 40,000 different business and civic leaders, taking your business globally is only for major corporations. And I want to debunk that. So I think this is a great opportunity for everyone to get this information. And right now, Peter, thank you so much. Take it away.
Thanks so much, Elena, and good morning, everyone. My name is Pete Tierney. I'm the director of the Harlem U.S. Export Assistance Center for the Department of Commerce. I help companies, mainly small, medium-sized businesses in Upper Manhattan, Queens, and the Bronx to develop their business overseas. So I've been helping companies export and exporting for about 25 years now. I was trained by the Japanese. I worked for the largest Japanese export trading company, a company called Mitsui & Company. They were founded in 1642 by a defeated samurai or Ronin. They do about 180 billion a year in sales and don't make any products. All they do is move other companies' products globally. I also work for the largest U.S. export management company. That's a company that acts as like an outsourced international department for small, mid-sized manufacturers. That company represented about 70 U.S. manufacturers. So I've exported integrated chips from California to Novosibirsk, Russia, wood chippers made in Fargo, North Dakota to Wuhan, China, solar electronics made in Plano, Texas to Mexico duty-free. And one of my favorite, I used to export mouse traps made in Lititz, Pennsylvania to Beijing, and they used them in Mao Zedong's mausoleum because the U.S. mouse traps gets the mouse. Next slide, please. So why export? Companies that export grow faster and are about 8.5% less likely to go out of business. So some people think it's risky. I think it's risky if you're not in international markets and kind of spreading that risk into different sectors and different markets. Next slide. Why export? It's where the money is. It's where people are. It's like 70% of the world's buying power is overseas. So it's something you definitely have to look at. Next slide, please. So why export? I mean, advantages of Made in USA. You know, I know it's tough competing with the Chinese. I've done it for years. The pricing is killer, but there's still, you know, there's certain cachet to Made in USA. I mean, it's known for quality, you know, engineered products, not poisonous, durable, safe, also backed up by engineering and after sales service. The other thing too is honest and ethical business dealings. I mean, when someone's dealing with you internationally, they're not necessarily buying your product or service, they're buying your company, right? Because they need to build a business to make money in their market. So there's a lot to be said. I mean, I've exported Chinese solar equipment for years, and you can make money for about 6 months until your partner is selling to your customers. So international people want a long-term relationship, and that's something they look to the US for. Next slide, please. Next slide, we can pop ahead. Next slide. So this is the one that kills me. So we export about 11% of our GDP. Germany exports 47%. Now, don't tell me German products are cheaper, right? I mean, anyone has a Mercedes and has to buy parts, German parts are more expensive. I personally wouldn't know. I'm from Detroit, so I only drive American cars. Next slide, please. So I'm going to go real quickly over the 4 barriers that I see that kind of keep US companies from exporting, and just tell you why they're really not barriers at all. Next slide. So the first one is documents. People say, oh, I don't know how to do the documents. What's the paperwork, or do I have to pay a fee to export to the government? No, this is not Venezuela, right, where you have to pay the government. You can export. If you can find a customer overseas to get paid, you can pretty much export throughout the world. There's only 4 documents really you need for international business. One's a commercial invoice, similar to a domestic invoice. Maybe there's a couple extra fields. There's a packing list. That's your commercial invoice without pricing and with a little bit more details. How many pallets, how many units. There's certificate of origin. Real simple. It's like a packing list, but each line item, you just say where it's from. Is it made in USA? Is it from Canada? Is it from Mexico? Are some of the parts from China? You just list those out. It's real straightforward. And a shipper's letter of instruction, that's just all that information put in one 2-page Excel spreadsheet. You put in who you're selling to, what's the product, what's the value, where it's going. You hand that to your freight company, and that's the roadmap. They go, okay, they pick up your pallet, and it ends up in Jakarta, 6 weeks later. Next slide. That takes me to the next one, logistics, right? I mean, people say, oh, I don't know how to ship to Australia. It's like, well, I mean, when you ship to Alabama, you don't drive the truck. I mean, you don't need to know. You just hire a freight forwarder. And US, or especially New York City, I mean, there's so many, New York, New Jersey. They'll pick your product up at your door. You hand them the SLI, you tell them what to do, and the product gets there. They take care of everything. It hits the port. They contact the customer. Customer comes, clears duties. People get hung up on duties too. Oh, do I need to pay duties? No, usually whoever you're selling to, duties are usually collected, other than maybe Canada, you can do it, but most countries, the duties are collected in country by who you're selling to. So that's not a headache of yours to deal with. Next slide, please. Foreign cultures, right? So people think, oh, I don't know, how am I going to deal with this? And I can tell you, I've done business all over the world. People are the same everywhere. I don't care what clothes they're wearing, what they look like. People want to build their company. They want to make some money. They want to take care of their families. They want to go on vacation. So it's just, we need to get over that. But the fact that you're in New York City is you're ahead of everyone, right? I mean, if I'm in Iowa, I got to explain, oh, these are different cultures. If you're in New York City, you're dealing with 10 different cultures every day, every block you walk in New York City. So if you're in New York and you're doing business with Alabama or Wisconsin or California, you've already dealt with foreign cultures. You can easily deal with Mexico, China, Brazil. Next slide. And the other one is fear. I mean, Americans just tend to, and part of it is the US market's so big, right? So, a lot of companies don't really need to, but you should be looking at overseas, and you just got to get over the fear of it. And there's a lot of people on the call today that can help you to mitigate risk. There's no reason to take any big risks internationally. I know when I worked for the Japanese, every year Mitsui was one of the top 10 exporters of US products. So Japanese can come here in a second language, buy US products, mark them up, and export them throughout the world. So you just got to go over it. Someone just put in the text about most people speak English internationally, that is an advantage for us. But you need to put your documents into Spanish, into Chinese, into Indonesian, and don't do it by Google, and don't let your intern do it, right? Pay a translator and get it done right. I've learned the hard way. Next slide, please. Oh, Schedule B. So this is a harmonized code. We can help you do this. You want to find out what your HSC, your harmonized code is. That kind of opens the door to figuring out the marketing and looking at other competitors and where products are going. This is just a code that countries throughout the world agree on to charge you import duties or to charge your customers import duties. Next slide, please. Real quick, these are your go-to strategies, right? So you go into overseas market, you can find a sales rep or a sales agent, right? These are commission agents, usually 1 or 2 person firm that loves your product, that's going to drum up interest. Maybe they'll go to a trade show, they'll translate the brochures for you. They bring you business. They're not actually buying your product. They're going to bring you a PO, hopefully. Maybe you pay them a little bit per month or maybe pure commission. Once the sale's executed and you're paid, then you wire them, a commission fee based on what they've done. That's an easy way to get into a market. You just got to make sure you're not signing off for the next 10, 20 years, but we can talk about that. The second one is distributors. This is how most businesses internationally, you're selling to someone who's got a warehouse and a Rolodex of customers. They're usually selling to a smaller retailer that's selling to an end customer. It's two-step distribution. This is how, I don't know what percentage, but the most of the thing I've seen throughout the world is going through distributors. It just makes things simpler. You're shipping more product, and international business is based on, how much can you lower the freight by buying quantity. It's the same thing it's been for 4,000 years. So distribution works. There's a reason for it. Foreign retailers, you can do that. You can sell to Costco Japan. I've done it. You can sell to Bunnings or Yates in Australia, or like AUO Optics in Taiwan. These big stores, it can be done. It's hard. I mean, it's definitely a full-time job taking care of these big box retailers. Preferably maybe bring an agent in to help you that's local, but it can be done. And the last one is direct sales to end users. This is kind of the American way. I'm going to sell my own product, make my margin. Well, what I tell companies is 100% is zero. I mean, you're better off partnering with someone in a country to really ramp up your sales. Next slide. These are the e-commerce. So, COVID has really brought the world to your desktop. And we see a lot of companies, small companies that are starting to sell internationally. First thing's your website, right? Put some spec sheets into Spanish, into Chinese, into French, Portuguese, and get it done professionally. And just so that they have a familiarity. Yeah, they know English, but their customers or the big boss may not. So it's always good to have some languages. Use online marketplaces, preferably in country. I know we're partnered with like Amazon and Walmart, but I think they take too much, and Amazon doesn't even tell you who your customers are. I mean, that's just not a good long-term process, I think. Social media, right? So this is not actually for exporting sales as much as marketing, right? Is getting the word out. I'm working with one company right now. We're trying to help them find some influencers in India for a cosmetic product. So, and that's going to push back to a distributor or push those sales. And the last one's third-party in-country distributor sales through e-commerce. And this is really how e-commerce works, right? A lot of companies are trying to sell from the US. And I'll give you an example. We work with a sauce company. It's $8 a jar for the sauce. And if they ship it to the UK, it's $8 a jar to ship it. We helped them get a quote. If we ship 2 pallets to Felixstowe Port outside of London, the price goes from $8 a jar to 41 cents a jar, logistics. So now you got $6 you can add back to your customer over there and let them deliver it, sell it over their website and deliver it locally. E-commerce internationally really works with a local delivery just because of the cost of freight. Next slide, and I need to wrap up. Use us, use the government. I mean, you talk to EXIM, SBA, SBDC, the Small Business Development Centers, Department of Commerce. We're here to help you. So we can definitely help you along the way. Next slide, Rich, and I'll just wrap up. This is our commercial service. We have offices all over the world. So if you're a small business, we can be your arm. We can be your offices throughout the world to help you get in those markets. Next slide, please. We do export counseling, market intelligence. Next slide, Rich. And trade events, we can help you at trade shows. Trade shows the way to do it. Go to a trade show overseas and meet everyone in one room. It's been the same way for about 4,000 years. Originally Phoenicians, then Venetians. It's the way to do it. Meet everyone in one room. Next slide. these are some of the services we offer. If anyone's interested, you can let me know. We can find customers for you, do partner searches. We can help you set up meetings overseas. Next slide. And common red flags, we'll send this later. You want it to succeed internationally, you need to know who not to do business with. You need to focus on who you're going to make money with, right? So the trick is focus on people you're going to make money and not every joker that emails you or texts you. Next slide, please. Small companies are doing, we just signed a contract yesterday in my office with a small business in Harlem who's doing online education. She just signed an agreement with the University of Ghana. So she's going to be providing her courses from Harlem online to the University of Ghana. That's it for me. Thanks so much, Rich and Helena. I appreciate it.
Thank you so much. And definitely put your information in the chat. If you have any questions, we'll be doing a Q&A at the end. Next, we have Abby Martinez, Export Finance Manager, SBA Office for International Trade. Abby, take it away.
Thank you, Helena, and good morning, everyone. And I'm really glad everyone is here this morning to listen to these different resources that are available to you. As Helena mentioned, I am Abby Martinez. I'm an export finance manager for the New York and New Jersey markets of the Office of International Trade at the U.S. Small Business Administration. Next slide. Our mission of the Office of International Trade is to increase the number of small business exporters, thereby increasing the volume of U.S. exports. Basically, we want to help you compete in the global marketplace. Just like Peter mentioned, there's a whole new world out there, right? Like myself, we have export finance managers located throughout the states, and we're here to help provide training and support to your lender to let them understand how these programs work, in addition to providing these types of trainings to small business customers so that they can access the working capital that they need. Next slide. Here are some of the challenges facing companies these days, right? Definitely, you have to think about why does the bank have so many regulations? Why is it that, what are they looking at when they're looking to provide you with a loan? Well, the very first thing is they want to make sure that they are going to get repaid. That is how they make their money. So some of the items listed here, such as character and capacity and capital, those are all the 5 C's that basically banks are looking at to help you, to help provide you with a loan. Next slide. So what are the benefits of SBA? Why use SBA, right? If the bank is already, scrutinizing me on my capital and my capacity, et cetera, and taking a look at all of this, why SBA? What's the benefit of it? Well, basically, the benefit is that we're here to help them or to incentivize them to lend to companies who export. Typically, a bank will not look at your foreign receivables or your export receivables as collateral, or they won't even look at it as, something that they want to touch, right? They want to stay away from it as much as possible. But utilizing SBA's guarantee, we incent them to then be able to lend to you. So we necessarily do not lend directly to you as the company, but we do provide incentives and guarantees to the lenders so that they could lend to you utilizing some of our export programs that we have. Next slide. Some of our eligibility requirements, I'm not going to go into full detail here, but I will say that we do have some that cannot be altered, right? Some of them are etched in stone, and some of them can be found on our SOP, which is our standard operating procedures, and that is found on our website, sba.gov. But here's just a list of some of the main ones. You do have to be a U.S. citizen or a legal permanent resident, alien, in order to qualify for these loans. The loans do have to benefit your domestic company here. So again, these are just some of them that I wanted to highlight, but we have many more that also have to be included and have to be reviewed for eligibility. Next slide. So how does the SBA define an exporter? So really, an exporter is somebody who provides a sale of a product or service to a foreign buyer. That's the general definition of an exporter. However, we have three different ways that you can be an exporter. So you can be a domestic to foreign exporter, meaning that you may make something here and you export it to the foreign buyer, or maybe you import it from somewhere, receive it here, and then export it. Again, that's still a domestic to foreign exporter, okay? Because you're holding on to that inventory and you're then selling it from a New York or New Jersey port. Our next one is foreign to foreign. So that's in the case where, and this really came up really during COVID, where let's say you source your product from China and you're selling to Spain. And you're invoicing that foreign buyer in Spain. So you are selling foreign to foreign. And the reason is because that the goods from China are going directly to that company in Spain. They're not coming here. And like I said, during COVID, that was a real big deterrent for a lot of small businesses because just the whole movement of goods during COVID caused tremendous delays for companies. So it made no sense for companies to ship everything to the States to then have to re-export it back out. So SBA did change their SOP, their standard operating procedure, to allow for foreign to foreign exports. And then we also have what's called indirect exporters, where let's say you are a manufacturer or a company that provides a complementary product to a bigger company that is going to utilize that into what they're selling to a final buyer overseas. Like if we can think of John Deere, Caterpillar, let's say you sell them a widget, they take that widget, put it into one of their heavy equipment, and then it gets exported. That is considered an indirect exporter. You're part of that supply chain, so therefore that would count as an export. Next slide. So SBA's Office of International Trade is really here to make sure that you're not alone when you're selling globally. We have many solutions to obstacles that companies face, and some of them may be holding you back. So we really kind of follow what SBA as a whole provides as far as loans and guarantees and counseling and all of that. The only difference is that we kind of focus more on the global opportunities that are out there. So we have three different loan programs or three different ways that we can help you with your export business plan. And the first way is through our STEP funding. The second way is through counseling. And our third way is through our trade loan programs. Next slide. So as we take a look at the grants, the first way we can assist is through these grants. It's called the State Trade Expansion Program, or STEP. And this is really for established small businesses that are new to export, or even current exporters that are looking to expand further into new markets. And we at the Office of International Trade provide these financial awards to help our partner organizations assist small businesses with export development grants to get started. Some of these grants or these financial awards can be to attend a trade show, as Peter mentioned. It could be to maybe website optimization, maybe modernize your website. It could be used for many different things. It is a reimbursement program, and it is administered by Global New York here in the New York area. Next slide. The second way we assist exporters is through counseling and training. We are engaged in counseling and training through our district offices and through partner organizations who provide local counselors that can help get businesses trained, can get assistance in creating a business plan so that you can start or you can grow or you can expand your export business. Like some of the organizations mentioned here, there are some international counselors at each of these federal, state, or local resources that can help you work on building your business. I will say on the bottom there, we have the U.S. Export Assistance Centers, or the USEACs, and that's typically where we, the SBA export finance managers, sit, and it's usually cohabitated with other federal agencies such as the Department of Commerce and EXIM. Next slide. So the third way we provide assistance to exporters is through our loan programs. And basically, these in essence are programs where you could utilize to take a look and see how you can fit into your need, right? So we have um, microloans, which are basically if you're starting your business, they allow for financing up to $50,000. Maybe you just need to do a small trade show. Maybe you need something translated, and so these micro lenders can provide you with those small loan amounts. Some of them do provide seed money to get your business up and going, and or to help provide or give your business that boost in the arm as needed. We also have our Community Advantage loan programs that go up to $350,000. And recently, or I believe it's going to change in January, they may be going up to $500,000. And or you could use maybe our 504 real estate loan program, which is for owner-occupied real estate purchase or equipment financing. So these all can help you in the long run to be prepared for your export journey. Next slide. So now, once you're established for at least a year and you have basically some experience, etc., we do have the following loan programs available for companies that meet the small business exporter definition. So if you have, so these loans are provided by our lender network. And I would like to highlight the last point on this page, that for our loans for $1 million or less, we are not charging any SBA fees for this new fiscal year. So let's take a look at these programs. Next slide. We have our Export Express program, which is one program, but it has multiple uses. It is probably our most flexible program because it could be a term loan or a revolving line of credit. And the line of credit allows for the issuance of standby LCs with only 25% cash collateral. It could be used also for many different things, such as expanding your website, attending a trade show, basically anything that goes with your export development. Basically is what it's for. We do require that you have a questionnaire filled out or completed with your lender that gives some basic information about the markets that you're selling to, who is your customer profile, are they a distributor, are they end users, what is your model, right? And then also, what is the product that you're selling? Next slide. Then we have our international trade loan, which is really a term loan for any capital expenditures that you're going to do. Let's say you're going to expand your facility. You need to upgrade your equipment. You're looking to, if you can upgrade your equipment, you can thereby provide more output for more export products, right? So definitely that's where this international trade loan comes into play. It does go up to $5 million, this loan, and an export business plan is required for this one. Next slide. Our export working capital is a line of credit, which goes up to $5 million. And these lines can be asset-based or transaction-based. Basically, both lines can support the issuance of standbys. And again, sometimes when you're bidding on a foreign project, your foreign buyer does require, let's say, bids, and they will take a look and see which company provided the best bid. So you may need a letter of credit for that, or maybe even a letter of credit for a performance letter of credit. So again, these are different ways that this program can allow or can assist you with your export plans. Next slide. So we do have a new 7A working capital pilot program. This one is not export related, but it can be, right? So basically, it is a line of credit for up to $5 million. It allows for working capital for companies that just need some assistance in purchase order financing, who need just to have availability of this type of line of credit. We noticed that a lot of companies need to have kind of a line available, if you will. And credit cards, we know, are a very expensive way, but maybe a line of credit would be a more economical way of doing this, where you can actually get purchase order financing for, let's say, a specific contract you have, or if you have the receivables on your books, it also can help with that. So this one is also asset-based or transaction-based. And the great thing about this is it can be used for both your domestic and your international receivables. It also could be 100% domestic. So let's say if you have all your business is domestic right now, this may be a solution for you as well. Next slide. So to recap, our services for companies that are looking to go international or looking to export more, we have our STEP awards, we have counseling and training available, we also have our trade finance programs, and we're here to help you with your export journey. Next slide. Okay, that's it. So as your export finance manager for the New York market, I want to just thank you so much for your time this morning, and I will hand it over, I guess, to Helena or to Rich. I'm not sure.
Thank you so much, Abby. We will get to your questions. I know there's a couple of questions in there. We'll do a Q&A at the end. Right now, we are introducing Richard Foy, Deputy Managing Manager,
Yes.
Eastern Region of EXIM, Export-Import Bank of the United States. Richard, take it away. Thank you so much.
Thank you. Thanks for having me and my colleagues, Abby and Peter. Thanks for a great presentation. So I'm the regional director. I don't know what the deputy managing manager is. Sounds very government, so maybe it sticks, but that's not my title. Although I do work in the Eastern region, I sit in New York, in New York City, and my area of responsibility is in Northeast, so New York up to Maine. We'll talk today about some solutions that can help, that EXIM Bank has, that can help you grow your exports. So first, I'm going to kind of outline who we are, why we exist, and why you should care. EXIM Bank was established in 1934 as part of the New Deal. And the goal was to support jobs or growing jobs by supporting exports. They know that companies, as Peter said, companies that export, they're more sustainable, they grow at a faster rate, and they hire at a faster rate, of course. So we wanted to get involved in that particular area of the economy because that's the fastest way to grow jobs. We're headquartered in Washington, D.C., operating out of 12 regional offices. Like I said, I'm in New York, New York City. And that's our goal. So jobs is our goal. And it's a little different than SBA. SBA is looking to grow export companies on a revenue basis. We're looking really for the jobs. And that'll make sense when I discuss the requirements to work with EXIM Bank, which are slightly different than SBA. Peter discussed earlier, one of the reasons why folks don't export is fear. And I'll kind of build off of that because it's very real. And that is a common thread that runs through EXIM Bank, is to try to alleviate some of the fear, regardless of where you are in the transaction. So what EXIM does, we help improve competitiveness by ensuring receivables, so taking some of the risk out of receivables. We assist in obtaining working capital that's needed to fulfill orders, and that's working with banks and trying to alleviate their fear. And we also support capital equipment exports with term loans for foreign buyers, again, through a bank guarantee. So usually what you'll see is you need funds to fulfill an order. That's working capital. You have to extend credit to your foreign buyers. That's usually uncomfortable for a lot of people because they're fearful of not being paid, right? Or maybe your foreign buyer needs financing in order to purchase your particular equipment. And we'll go into each of those and how we deal with them. But first, I want to EXIM Bank, people hear about EXIM Bank and they've heard in the news, oh, the Bank of Boeing, or they only handle large transactions. And we do. We absolutely support those large transactions, large companies. What's often overlooked is the small business supply chain that feeds into those. A Boeing aircraft, of course, requires a lot of small businesses to feed into the completion of an aircraft. But aside from that, most of our transactions, in fact, are for small business, and they're not really large transactions. Over 50% are under 500,000. So we're very focused on small business and making because they grow faster, they hire quicker, they're more nimble and adapting to changing needs around the world. Those are some old numbers, but actually I think we've improved those numbers. Those are 2022. I have to get some new slides. And we really want to make sure that folks in underserved areas historically are aware of what we do. So, I'm always out there trying to talk to specific groups that may not have heard about EXIM Bank in the past. And we have a group within the bank, minority and women-owned business group that also kind of looks to educate those things. But we'll get to the real reason you came. I'm gonna skip over that. I'll go into a working capital loan guarantee. It's important to understand what this is, how it benefits you as an exporter, and what it doesn't do, probably most importantly. It's a guarantee that we provide as a government agency to a commercial lender to incentivize them to make a loan that they might not make on their own, right? So Abby kind of went into some of the criteria that goes into a banker's mind when they're evaluating a loan need. Lenders don't like export business for some reason. They don't like that the product you're shipping is overseas. There's difficult availability for clawback and so on. Receivables are foreign. There's a lot that they're uncomfortable with about the export business. So we come in and we say, all right, if you make this loan to exporter ABC and they default on the loan, we're going to pay you back 90%. We guarantee 90%. So they retain 10% risk. Okay. That incentivizes them to make this loan so that you can fulfill the orders that you've had come in. Also, with our guarantee, it allows you to unlock additional funding with your collateral base that the banks would not normally consider. And I have an illustration of that shortly. So again, it provides a 90% guarantee to the lender. It can be set up as a transaction specific. So if you're maybe building a custom machine and you need to draw, or a revolving line of credit. If you're selling to distributors, you're making widgets and you're pumping them out, and it just comes back, you pay down the line of credit, you borrow more, and it goes on. We don't have a minimum or a maximum amount. However, a bank will determine ultimately which guarantee program they use. You saw in Abby's presentation that they cap at 5 million. So if we're working with an exporter that obviously has a working capital need greater than 5 million, naturally they would come to EXIM Bank. Step down, if they're growing at a fast rate and they only need $3 million now, they might also choose EXIM. Under that, and if it's stable that they need under $3 million, usually a bank will decide to go with an SBA guarantee for a variety of reasons, mostly because they have volume and they just know how to manage those loans. The process of obtaining a working capital facility is pretty simple. You work with your bank. You go into your banking relationship. You tell them what your need is, that you're exporting, and hopefully they're aware of these export-specific loan products for you. If they're not, you call me, you call Abby, and we'll make them aware of it. We'll educate them and help facilitate that loan process. If we can't, or if they're uninterested in loaning to you for whatever reason, we can try to position that loan in front of another lender. But we generally like to bring that loan opportunity to your current banking relationship, so long as everyone is satisfied with the relationship. All right, this illustration is going to show the difference between a line of credit, we'll say line of credit, with a $2 million borrowing base. On the left side, we have export inventory of raw material, WIP, and finished goods. All right, so work in progress is basically a half-baked cake. It's got no value to anyone. It's not flour, sugar, and anything else anymore, and it's not a finished good. So it's worthless really to anyone, especially to a bank. So they won't advance anything on WIP. Raw materials, well, again, they have to find someone else that needs that exact raw material. They'll only advance 20%. On a finished product, they'll advance typically up to 50% on that. And on receivables, foreign accounts receivable, banks don't like at all. So they weren't not going to advance on this 400,000 you have in foreign receivables. If it's backed by a letter of credit or similar, they'll advance 70%. So with this $2 million of collateral that you have, your borrowing base, your max loan size is around $760,000. But when you work with EXIM Bank, SBA is very similar to this. We allow the banks to advance at a higher rate, up to 75% on raw material, WIP, and finished goods, all of them, and 90% on accounts receivable, right? So now you go from a borrowing base of $760,000 to a borrowing base of 1.6 million. So that is a big difference. That allows for a lot of growth as you're moving forward. But keep in mind, when you borrow, you have to pay this back, right? And I want you in a position where you're able to pay it back, because it's fine if the loan gets paid off by EXIM Bank and the bank is happy, but let's figure out a way that you don't have to default on that loan. Our products cover from working capital, like we said, all the way to post-export financing. We'll discuss that now. With credit insurance. Credit insurance is a very powerful tool for you as you're beginning your export journey, or if you've been exporting for a while but required advance payment. If you've been exporting for a while and you've required advance payment, you know that can be terribly limiting in the order size or the customer type that you are engaged with, right? Because they're tying up their cash in hopes that you're going to pay. Export credit insurance allows you to extend open payment terms without the fear of non-payment. So it's a policy that covers the receivables, and it protects against non-payment for a variety of reasons, and I'll go into them in a moment. It allows you to be competitive now, because when you're able to offer open payment terms, you put yourself at a different level as a vendor to these folks. You're looked at more seriously, and you're more considerate of their needs, their need to receive the product, turn it before they pay, and this can be very powerful. Let's look at a spectrum of risk here. You have the seller at the top line, the buyer on the bottom. On the left side, we have cash in advance. This is low risk as an exporter. You receive the money and then you send the product once it's complete. It's very high risk for the buyer though, right? Because they've put out however much money and they're just praying that you actually send them the product. There is a lot in between there, letters of credit, cash against documents, other tools where you have a third party involved, and they have open account on the right. This is a high risk scenario for a seller because again, you're sending the product out now. So we're just flipping this. You're sending the product out and you're hoping that you're going to get paid at some point. But this is fantastic for a buyer. That really is the height of flexibility, because they're able to receive product, maybe buy more, usually buy considerably more than they would be able to if they were required to pay in advance for it, right? Because now they can build a market for your product, they can sell it and then pay you. It's pretty simple process as well. You negotiate with your buyer, you negotiate terms, you come into us, you say, hey, this is a buyer that wants to buy from us. They need 60-day terms and $150,000 limit. We underwrite that buyer and we approve it and say they're good. We like this company. We're confident that they're going to pay. At that point, you just ship to them. There's no change. And Peter mentioned documentation. There's no change in documentation. There's no, extraneous documents like you would have with a letter of credit or similar. You report those shipments the month after you've shipped, and you pay premium at that time. If the buyer pays you, that's fine. Everybody's happy. If they don't, then you come to us, you file a claim. We settle that claim within 30 days of receipt of all the documents. So what are the benefits? Risk protection, obviously, right? You're protected against non-payment from your buyer for commercial and political risk, and I'll explain those. As a sales tool, this is extremely valuable. When you're able to pump your chest and say, yeah, I can extend you payment terms, a lot of foreign buyers, they really take notice of you at that point, and they're really willing to do business with you. As a financing aid, we discussed in that prior slide about the borrowing base. These insured receivables, now they're an asset, and your bank will look favorably on those, and they'll advance up to 90% on those insured receivables. So it allows you to have this snowball effect. The more orders you get in and the more receivables you have insured, the more working capital you have available to you. So what's covered under the commercial side: insolvency, bankruptcy, protracted default. So if they're not paying in accordance with the contract, slow pay or so, that's on the commercial risk side. On the political risk side, which a lot of people just overlook, we have war, revolution, insurrection. These are kind of important this day and age, right? Currency transfer risk, where maybe the buyer wants to pay you, but they can't get US dollars out of the country, or a cancellation of an import or export license where they can't receive the product because the country won't let them in. That's also a covered cause of loss. Disputes with a buyer are not covered. They need to be resolved before we can participate in a claim settlement. So if a company orders white socks and you send them pink, we have to work out the difference, maybe discounting the invoice for them. If you've agreed at a discounted price and then they still fail to pay you, then we get involved because that dispute's been resolved. So I'm just going to go through this quickly. We have a couple of different structures: a multi-buyer, where it's called a whole turnover. We look to insure all of your receivables, your foreign receivables that are sold on open payment terms, not your cash, not your letter of credit, not your cash in advance. And then we all have a single buyer. So if you only have one buyer, we can handle that as well with that concentration of risk. We only cover it at 90% as opposed to 95% on a multi-buyer where we have a greater spread of risk. There's no deductible on our policies, and all of our policies have that pay-as-you-go structure. So the premium will follow the sale. Lastly, we have medium-term financing. If you're in a position where you're selling capital equipment, large ticket items, and your buyer would benefit from term financing, 1 year, 2 year, 3 year, up to generally 5 years, and usually below $25 million, fits well into this structure. We're able to facilitate a term loan for them. You get paid as the exporter as soon as it's exported. It's exported, the lender that's loaning directly to your buyer pays you, and you move on. You don't have to carry it on your books the way you would an open receivable. We cannot handle military or defense related products. Goods must ship from the U.S. And they must be invoiced to a foreign buyer. We have a country limitation schedule on our website, exim.gov, that identifies countries where we're open, where we're not open, and where there are some notes that you should be aware of. So again, products shipped from the US, 50% or greater US content, because again, we're looking at jobs. We want things made here. And we look for our loans to have 3-year operating history. and a positive net worth. That's not the deal with our credit insurance. We can deal with younger companies without much of a record. We're underwriting the foreign buyer in these cases. And that's it. This is an important slide. So I think we're sharing this. If we're not sharing this, take a picture of it. I invite anybody to give me a call, discuss what you have going on. If I can't help you, I probably have someone in my network that can, and we're always willing to listen to you and put you into the proper resource. And with that, I'll turn it back over to Elena.
Okay, thank you so much. Richard, can you go to slide 71? I think there might be, okay.
Got this?
Yeah, if anyone can put, answer, the questions in the chat. Would you like to be contacted by any of the speakers today? Put your information in the chat and I will make sure that they get all this information. You can put A, yes by EXIM, A, yes by US Commercial Service, A, yes by SBA, A, or no at this time. So if you can just put your information in the chat. Couple of questions here. Can a business pursue more than one EXIM program? If so, what is the application process briefly?
Yeah, so our working capital guarantee program and our credit insurance program go very well together. It's the same with SBAs. I mean, an SBA working capital program and EXIM credit work very well together. And in both cases, you actually get a discount on your insurance premium if you do have either an EXIM working capital or an SBA working capital. So absolutely, they can use multiple programs.
Perfect. Does EXIM charge any fees?
Yes. The good news is that the fees we charge, for the most part, can be passed on to your customers. They're very low. For our insurance program, our multi-buyer policy is about 55 basis points. So if you have a $10,000 shipment, it's about $55 for 95% coverage. Is very inexpensive. For our working capital facilities, our loan, we have a guarantee fee that is charged to the lender and then they pass it on to you because this is a guarantee to benefit the lender, right? But they don't take it. They pass every fee on to you. But it's a fee that changes based on the amount that your loan is for. I don't have the exact figures on me, but again, it's 1 or 2% of the loan value.
Sounds good. Where do people find international buyers?
Pete Tierney.
Yeah, let me help with that. And before I answer that question, let me just back up Rich for a second. I know Rich has a face you can trust, but this EXIM bank, 20 years, he backs Boeing right now, but 20 years ago, that's all he backed was Boeing. Now the program to back up receivables for small businesses, it's really amazing. I mean, you can extend credit terms overseas and just every month you log into their system what you shipped. I mean, it has to be approved ahead of time with the customer, but we're talking $50,000 net 60-day terms, you'll pay $300. I mean, you cannot get this kind of program and if you want to increase sales, yeah, you can get cash advance all day long. But if you want to increase sales in Latin America and Southeast Asia, you need to give terms. And the best way to do it is working with Rich with EXIM. All right, that's my pitch for Rich. So we can help you. That's one, if you're looking for overseas buyers, that's one of our key services that we provide as a commercial service. We have offices all over the world. So we have services where we can find like potential buyers for you in a certain country. And if you want to go there, we can set up meetings. We also have access to some databases that we can access. I've actually used the New York Public Library as an amazing resource for finding buyers overseas. There's databases now that take all the information of products that are exported and imported throughout the world that you can now access. So if you have a competitor, you can look at them, see where they're exporting to. Sometimes you're lucky enough to find out exactly who they're exporting to. So there's different ways to skin that cat, but we can definitely help on that side.
Love the answer. Do you have to notify the buyer that you're using an EXIM policy?
No, that's the beauty of it. This really just stands behind you and protects you. So they don't have to know. Here's what usually happens. A buyer, an exporter insures it, a particular shipment, receivable. They don't tell the buyer because they don't have to. The buyer doesn't pay, then the broker is able to give a scary letter to them. Hey, this is insured by the U.S. government. If you don't pay, the U.S. government's not going to like you. And that usually increases the rate of payment. That invoice goes to the top of the pile.
Buyer is covered by ECI.
I'm sorry, say again?
How do I know if a buyer is covered by ECI?
Yeah, so a buyer, you would come to us, put a policy together for your company. Consider this an umbrella, right? And then each buyer that you're selling to, we would we would attach them to the policy, their name, the limit, and the tenor. The term, 60 days, 90 days, whatever. So we would schedule each of your buyers on your policy.
Love it. And a question for Abby, I think this is for you, that you've talked about international programs for loans and access to capital. Who should they contact and what program should they kind of gear towards?
Oh, it really depends who their lender is. If they have a lender already that they're working with, I would encourage them to reach out to their lender. Just because nowadays lending with all the compliance and regulations, it's just easier to start from there. However, if you're looking for a particular program or for a particular lender that participates in a particular program, we do have our website that has a lender match type of scenario where you can go in and put in some basic information about your company, and it'll give you a response of the different lenders that would be willing to take a look at your transaction or at your company to help you with that. Or
Thank
reach
you.
out to me. Either
There
way.
we,
Yeah.
perfect. One last question. Does the buyer have to sign off on the invoice for any credit to be extended? And what is the final documents needed?
No, so we just do a credit check. In some cases, if we're talking about larger, so again, the dollar size matters. If it's over $1 million that we're extending credit, you're likely going to. This is not to divert from what standard credit practices are. You would maybe want to get some documentation from them, maybe audited financials and so on. But you can request that as an exporter. This is part of our credit review process. We need this documentation, but they don't ever have to know or sign off on the fact that you are credit insuring an invoice. Now, it's important to note this is not as widely used here in the US, but in Europe, this is commonplace. The expectation is if you are extending credit to me, that you have insurance for that. It's not the same here. I think they use it over 80% of the time. Here in the US, we're under 20% utilization of credit insurance. So it's an education thing for US business owners that this is a tool that can be valuable to them. They just have to use it more.
Love it. Well, it's 11:01. Thank you so much,
So you
Peter,
paid
Richard,
overtime?
Abby, everyone. Richard, I didn't mean to interrupt it. There was a delay. Go ahead.
No, it's 11:01. I was asking if I get overtime.
Love it. It's holiday season. So yes, come on over. By the way, if you're joining us tonight, we have our holiday party. So Richard, Abby, and Peter, more than welcome to join us, and we'll spread that international trade cheer. So again, thank you so much. I from the bottom of my heart, our mantra from the Greater New York Chamber is to grow your business. And I say this all the time. It's so important to provide this information to the businesses, especially the small and medium size. I said that at the beginning. A lot of the corporations do have departments for that, but if we get it in the hands of the small business owners who don't have the departments, I think it opens up the economy for everyone, whether they're local, regional, national, or international. So I applaud you for giving us the opportunity and the platform to provide this information. It is being recorded. It will be on Chamber TV. They did a poll. They will reach out to you if you put your information in the chat. If there's any questions that you have, email me and I'll forward it right to the team. Thank you everyone so much. Have a great day. Happy holidays to everyone. And I hope you all have a safe and prosperous and adventurous new year. There we go.
Thank you
Thank
very
you.
much.
Enjoy.
Thanks, everyone.
Take care.
All right.
Have a great day.